All right, this is your market recap for November 13th, 2025. As you can see today, we played bearish once again. We plowed through this daily fair value gap that we had right here, as well as fully closed the weekly new week opening gap that was present. Go down to the 4 hour. We can see here that this was in the markets for a while. We had this fair value gap right here, which as soon as market opened yesterday night, we rallied, concentric encroachment, perfect closure at concentric encroachment, and then we sold off perfectly there. 4 hour candle dumped as well. Here's that new week opening gap I was talking about. Completely got closed and closed below. Hourly time frame, there's a little more that helps us see this. Once again, boom, reaction there, down, validates. This right here validates this hourly fair value gap. Come up, closures at that 4 hour concentric encroachment once again. Start to tip over. Boom, break through, close below it, come up, concentric encroachment of this hourly right here. Now, what does this tell me? All right, these two things tell me that we are at least targeting the sell side. All right, targeting the sell side. If we go to the 4 hour, targeting that sell side. If we look here, we rallied, little sell side action, still fair value, still new week opening gap left. We rallied, we're coming up, we're losing volume, right? We're losing volume, starting to tip over. And so not only is this the draw, right? Relative equal lows resting through here, but we have this daily fair value gap we could target and this new week opening gap that you could target from there. So as you can see, hourly fair value gap there, 8 o'clock, we started dumping, dumped the whole day, hit a nice retrace here, which I caught or tried to catch, and then boom, fully closed it and continued a little lower. 15-minute time frame, not a whole lot actually, if anything at all. We can just see more clearly here. Up, lost all volume, 4 hour reactions here, pumped, down, used the hourly, tried to pump one more time. We did technically take this high, but not convincingly enough. We then tipped over, came down, used this as an inverse, taking us down, hit the sell side. Nice little retrace here. Market opened, dumped, macro, retraced, dumped once again, filling in the rest of this new week opening gap. And then lunch kind of consolidated us down a little lower, and then PM session just consolidated the rest. 5-minute time frame, again, here we are, 4 hour fair value gap, concentric encroachment twice, down below this hourly, concentric encroachment there, 8 o'clock sell off. Here are these relative equal lows right there. Sell side liquidity here gets swept pre-market, so we rally from there. Now what does that tell us? Boom. Grade the scale, equilibrium right there. So keep that in mind. It's also on the 1 minute. We are retraced here. Not only are we retraced there, but this leg, we're retraced here. So in my mind, I see this. Down, retrace, equilibrium, fine. Down, up, equilibrium, fine. Down, up, equilibrium, fine. Down, up, equilibrium, fine, right? So if we have in mind, we have these lower sell side, we've been reacting off we've been reacting off of equilibrium of each of these. So it's not like we have this gaping hole in price action that we need to fill. We're decently priced, retraced up into equilibrium with sell side draws. Wonder what market open's going to do. Sells off, taps into the new week opening gap, retraces upwards. Once again, taps the low of the daily fair value gap, rallies, taps the high of the daily fair value gap, and then we continue lower to finally close the rest of the new week opening gap. And like I mentioned, from there, consolidated for a bit, sold off one more time, and then consolidated for PM session. Now, there's two main trades that I saw today, or that I saw in hindsight today, and then I'll go over first I'll go over what I took a trade on. So I saw us selling off here. I saw us take this low, come up, draw down here. I thought, okay, this right here is a good chance for us to either 1, retrace, or 2, reverse. So I was waiting for some sort of confirmation. Wasn't the time yet, had no SMT, so the only confirmation that I had was this inverse fair value gap. Now normally I'd enter here. at the low, or sorry, at the high of it, stops below here, profits wherever through here, right? And this would have worked. However, given that we have this really high time frame, like we're talking hour, 4 hour array here, we don't have a macro and we have nothing else to as far as confirmation goes. I needed to see this close, give a reaction off of it, not take us below here and close. So I entered on the close of this candle because that to me gave me confirmation that we were playing bullish, right? Right, stop went there, break even was this high here, profit one was here. Now, unfortunately, as you can see here, I have break even here. So we entered, came up, took out break even, retraced nicely to this 1 minute fair value gap, played bullish, SMT of these highs, came down, took us out of break even before we continued all the way up to the daily fair value gap high. Now, the two trades that in hindsight looked great are these, right? Like I mentioned, grade this, boom, equilibrium right there. Come down, sweep sell side. We have lower draws, we know that. Start playing bullish, nice reaction off this 5 minute fair value gap, nice reaction at equilibrium of this bearish move. Then start to break down, fair value gap left here, 29 comes up, closes, 30 opens, shoots up, SMT of these highs. Reason why we're not reaching up here, we 100% could have, but it's because we are already at equilibrium and we have that sell side pressure. So we're going to get rid of that because that's no longer in the picture. SMT here. Now, what I would have been comfortable taking here is on the 15-second, there's a fair value up over here, right? The price, the 30 candle opens, rallies up here, takes out this high, comes all the way back down, closes within a 15-second fair value gap, and then the next candle does the same. It rallies up, and it comes down, and it closes below that fair value gap. It's kind of the same same idea here, right? Not only do I want to see it react off of it, but I want to see how the next candle behaves, because it could very well react nicely on this candle, and the next candle could just come down even lower and close. All right, and so if I don't have much backing my trade, I need a little more in the confirmation. So that would have been an entry here at 79 flat. And from here, you could target lows, right? You could target constant encroachment of that daily fair value gap. You could target the high of the new week opening gap. You could target the low of the daily fair value gap. Any of those, any and all of those would work, right? But for my purposes, I'd only target the high of the new week opening gap. Because then from there, we tap it, and then we get into my trade, playing bullish here, SMT down, up, equilibrium of this whole bearish move, sorry. You might ask yourself, okay, according to your logic before, right? Boom, retrace to equilibrium, boom, retrace to equilibrium, boom, retrace to equilibrium, boom, retrace to equilibrium, down. Let's just, for fun, I know it gets there, but boom, down, retrace to equilibrium. Why can't we just expand lower from here? Well, that's because on the higher time frame, like the hourly 4 hour, there's not much to play with as far as gaps go, right? Sure, we have this hourly fair value gap right here, which is another reason what causes us to play bullish there. But these right here, these ones that we're reacting off of for this run here, and what that run is that successive move that I just walked you through was the down, retrace, all to equilibrium. The higher time frame arrays, even if they're in the opposite direction, give you some sort of reaction. Because we look here, hourly fair value gap, extended across, closure within here, plays bullish. What also does it tap into? This weekly new week opening gap. So we get this larger retrace here, even though equilibrium of this move, bearish move, is here. We have higher time frame arrays backing this move, so we're going to see more of a retrace, right? And so we take this whole larger time frame, we grade it, equilibrium right there, we tap into equilibrium, gives us a nice SMT of these highs. Well, nice is, it could have been nicer in my opinion, but it still gets put in. We see this fair value gap here, right? I'm not entirely sure why it's on that high. Did I draw it wrong? No, I didn't draw it wrong. There is a gap between those two. Body, body, gap right there, included in the fair value gap. Now, SMT of these highs, we know we have lower draws still. We have not only this low, we have constant encroachment of the new week opening gap and the full closure of the new week opening gap. So, retrace, right? We SMT in these highs, we start to displace, boom, closure outside of this bullish fair value gap. Confirmation number one. Come up, tap into it. You could enter there if you want, right? But me personally, if I know I'm extremely bearish, I would enter here at the closure of this, right? Because that made this an inverse. And there's no guarantee that price is going to come back up and touch it. However, all we have framing this trade is this SMT. So I'm going to need a little more confirmation. This is another one of those where I see price, close, tap back up into it, and I may enter at the closure. That's being realistic. Now, if I was extremely bearish, yes, I could enter on the low of the inverse fair value gap. But if we're being real, with just an SMT and a higher time frame bias and no other lower time frame biases getting us anything, I'm going to need a little more confirmation. So this closure does that, right? So we hit that perfectly, expand lower, kind of all in one fell swoop. Lows here, here, and then obviously the low there could be your profits. And then once we hit this low, we consolidate. That's our target. And then lunch gives us a little motion down here. But then the rest of PM session does a whole lot of nothing. So today and most days recently, AM session has really been the driving factor behind these. So 2 trade of the days today, both of them are valid and in my opinion of the same quality. Now, going into the future, tomorrow's Friday. I know for sure on a weekly time frame we do not have anything on the weekly candle to retrace. Just for the fun of it, we'll check it out. Boom. All right. Yeah, we're already there. We're already at 20%. There's not a whole, sorry, too far. There's not a whole lot of range that we're dealing with here, given that most of the week was stuck up here. Now, like I mentioned, fair value gaps on the higher time frame may give us a little more trouble. Right? So we're in this 4-hour right here, pretty big one considering it goes all the way up here. We have this 4-hour just created, and in my opinion, we have draws down here. Right down to the hourly time frame, we can see we're already struggling a little bit. I very much see us coming back up to this new week opening gap, tapping that, and then playing bearish tomorrow, right? Because although we didn't take anything, like take any bit of liquidity, this right here is roughly 600 handles of continuous movement with no higher time frame retraces. And that's a lot to me, right? So we'll use these inefficiencies that we see over here. Again, hourly, extended over, taps into that 4-hour that we just saw. Both of those higher time frame things are likely to give us some sort of wick that will make us play like that. Now, what I'm basing this off of, if we look on the power of 3 on the daily candle, we opened here. If our draws are down here, we need some sort of buy side action. So I'm looking for the wick to be somewhere up here. And then we go down the 4-hour. Where is it targeting? This fair value gap or the low of this. All right. And coincidentally, they both happen to be equilibrium of that 4-hour. So that is a very high draw, in my opinion. So we could come up, hit that, and then seek our target from there. Or since we had such a huge day today, tomorrow could do absolutely nothing, right? No news, no nothing, no driving factor. Either are possible. So we got to keep that in mind. We'll see what happens between now and then before we make any decisions like always. But this has been your market recap for November 13th, 2025.